Tell us a little bit about the segmental growth in the quarter gone by, post the recent acquisitions that you've done.
The results that we announced yesterday have got several parts to it, and I would like to explain this step by step. First of all, our consolidated results are not comparable to the same quarter last year, primarily because Quess has been deconsolidated from being a subsidiary that was consolidated into our accounts into a associate, and therefore we're only taking a fraction of representing our ownership in Quess, which is 49.02%. The second important point is that we made several acquisitions in the second half of calendar year 2018 and therefore, calendar year 2017, and again those are not reflected adequately comparable in these numbers.
Okay, fair point. So how did OFS actually help you cut costs?
If you look at our interest costs, you will see a reduction in the interest costs, which is beginning to blow through primarily on the back of the OFS proceeds remaining with us, and that has helped us repay whatever little short-term debt that we had on our books. You will notice that if you look at the standalone, the debt is almost negligible now and is expected to wind down over the next 2 quarters.
What kind of growth in holiday businesses and other segments do you foresee?
So I think the holiday business has clearly shown strong growth, and I'm happy to report that two businesses that we've incubated over the last 3 years, that is the e-business or the online business and the domestic business, both of which turned positive this quarter on the back of a seasonal demand. My expectation is that this is a reflection of the larger demand that we are witnessing in the holiday business.
Right, regarding travel-related financial services business, what's the outlook there?
So I think from a foreign exchange point of view, you need to look at the retail segment and not the wholesale segment. You'll appreciate the wholesale segment is driven purely by demand and supply, and that's not something that we are able to, we are in a position to control. But if you look at the retail business, it's actually grown on the back of better margins. And as I mentioned earlier, we've seen the offtake on our prepaid cards grow by 18% over a year ago. Now, if I look at the industry, whether it is the credit card industry or if I look at retail demand, I think both these, the numbers that I've quoted you actually stack up adequately against the demand witnessed across other industries.
Thanks very much for joining us and giving us those details on your earnings. I wish you the very best for the future. With that,